Hi, good to have you with us. How have you been?
I'm very good, Ashu. Thank you for having me.
These have been particularly difficult times, Vineet. I hope everybody, at office, home, within the portfolio, I hope everybody is safe. Not a significant damage, through the second wave.
Well, I think COVID itself has been unprecedented. Not since World War II have the world actually seen something as massive and as all-encompassing.
Right.
I mean, it's very difficult for anybody to say that they have gotten away from the impact of COVID. I mean, we actually have seen impact in Aavishkaar. We have seen in the families of our colleagues. We have seen some of our employees, some senior guys actually, we've lost them, and some in our companies as well. So very difficult to say that you have walked away from it unscathed. So
I kind of agree with what you're saying. And I think that's the case with each one of us, right? But Vineet, this is an exciting discussion that I'm kind of looking forward to, right? Unfortunately, it's happening, in the times of COVID, right? But I think it couldn't have been more significant, right? Because I think there's a renewed sentiment around impact. There's a renewed sentiment around sustainability, right? Something that you've kind of championed for the longest time, right? And I think in the current context, it becomes very, very important discussion. But before we dive into that, right? Before we dive into talking more about Avishkar, what the great stuff that you're doing at Avishkar, I'd love to quick rundown of your a quick round of introduction will be very helpful. You've been there long enough, right? And I think a quick 2 minutes should be helpful.
Yeah, so my name is Vineet Rai. I belong to Varanasi. Was born in Jodhpur. Jodhpur is in Rajasthan. I come from a classical middle class background. Wanted to join army. Army didn't like me, so I became a forester by mistake. Spent 3-4 years in the forest, and then actually set up probably India's first incubator for government of Gujarat. My job was to convert ideas of farmers into business. Realized that the missing middle is not ideas, but capital and talent. And so I decided to take water up the hill rather than down the hill. I wanted to take capital and talent to rural India. And that's how Aavishkaar started. So that's my journey. I started 20 years back, and I'm roughly 20 years old in that business of impact.
I like that. I like the way you put it. Interesting, right? So, Vineet, Aavishkaar is a fairly diversified group, right? There are many pieces to that business, right? I think it would be interesting if you could, if you could give us a sense of those verticals within the group, and what is it that they do uniquely?
So, Aavishkaar Group is a fairly recent phenomenon, just 4 years old. So, January 2017 is when we constructed the group. Very simply put, Aavishkaar Group actually is a holding company that has 4 different businesses. The first business is called Aavishkaar Capital. Aavishkaar Capital is $450 million impact investing arm. It basically makes equity investments in impactful businesses. Then we have Arohan, which is a 5,000 crore, $700 million microfinance, a digital microfinance company operating in the low-income states of India. With the idea to offer women, very poor women, a digital journey in some of the very remote parts of India. So we didn't want to actually offer cash to them. We wanted to create a digital journey, and this is actually what we have achieved. 2.3 million women is part of the portfolio, and we connect with them every week. Then we have the third is an NBFC, non-banking finance company called Ashwa, which is a technology-led technology delivery for assessing cash flows of micro and small enterprises. So companies that are doing turnover of 1 crore to 50 crores, who are new to credit. So these people have actually been scrounging around with their personal capital. New to credit, no bank willing to lend, don't have assets, don't have collateral to offer. How do you actually lend to them using technology? So data is, we are shifting physical collateral to data as a collateral, and then lending to them. And finally, Intellicap, intellectual capital. The idea was to attract the best of the talent and build the ecosystem. I mean, Silicon Valley is successful not because Silicon Valley has a lot of money. Silicon Valley is successful because it is an ecosystem. Academics, entrepreneurs, quality employees, capital, and capital with a willingness to take risk. Intellicap's job is to build ecosystems, entrepreneurial ecosystems that focus on impact across India, Africa, Southeast Asia.
Wonderful. Vineet, before we dive into the portfolio, right, and before we start talking about some of the great things that you're doing, right, across all of these vehicles, I'm particularly interested in the digital footprint play that you kind of mentioned, right, around Arohan and the microfinance institutions that you're kind of talking about, right, because it's a massively underserved category, right, right, and I think there are nuances to it, and I'd love to sort of cover that through the course of the conversation. But before we jump into any of that, right, I would love to discuss the idea of Bharat, right. I think there's a huge narrative which is built around Bharat, right? And I think that narrative has become all the more important, given that. So 2020, I think, kind of has expedited the entire journey, right? Something that could have possibly happened in, say, 2025, 2027, possibly, right, in terms of digital adoption. Uh, I think what this particular time did was that it locked us up, right, in a certain zone, and essentially we were consuming from just about few screens, right? And that kind of reduced the arbitrage between, say, a market A and a market B, right? Uh, and all of a sudden, Bharat is seeming to be a great opportunity to many people, right? And especially to investors out there, right? While of course, we are a country with many layers, many nuances. What's your idea of Bharat? I mean, you are operating in some of the very key areas, right? You've invested possibly in businesses that are dealing with people in that zone and region day in day out, right? What's your view of Bharat?
So, Ashu, I have interesting takes. I think the constitution says India, that is Bharat. So,
Right.
so India and Bharat are the same as far as I am concerned. Unfortunately, the world wants labels. That's why we are impact investing and not investing. So generally, as far as I'm concerned, they are the twain are the same, but partly because of businesses always look for an alternative story. Bharat has come up. Bharat generally means people who are actually accessing in a language that is other than English.
Right.
That's really, so whether it is content, whether it is engagement or asks, they are very different asks. But I think it is not necessarily because of COVID. I think technology has a deeper and a bigger role.
Right.
And this is a journey of discovery. And this journey is actually not necessarily happening because some of us discovered that you can use technology to do it.
Right.
This journey is happening because it has been architected over a couple of decades. The jam trinity, the penetration of mobile phones, the cost, the drop in cost of mobile phones, entrance of geo, ubiquitous awareness of presence of actually internet.
Right.
Those things put together has created a storyline that created the Bharat as a new thought process.
Right.
So it's not happened just because people live there. It's people who are always living there, but because of this infrastructure creation, suddenly the potential for an enterprise to go and address their needs have become significant. Now, why was Bharat not on the anvil for everybody? Infrastructure, roads, electricity, many other things that come into play.
Sure.
And there has been a significant change across all parameters now. But more importantly, the digital superway does not require you to travel. It just goes, you can beam it sitting from anywhere. And it can be captured. And people don't need to be of a certain density. So they can spread out, you can still reach it.
Sure.
So even if 5 people are sitting on 5 different mountains, you can still serve them without cost of acquisition being a fairly large factor. So if I go from purely business sentiment perspective, the business was trying to reach out to as many people. Technology allowed them to actually deal with this segregated masses to reach out, and language was the barrier, which essentially Bharat and the content being in a different language is actually broken through. But that's how business see it. From my perspective, from my impact lens, we see digital or we see technology as a very different reason for success.
Interesting. Vineet, one thing which is very interesting, right, is that while we talk of digital option, right, and I'm specifically I'm talking about Bharat right now, right, is that while we of course talk about digital adoption, right, about technology adoption, right, and like you said, right, there is infrastructure that has gotten created in the process, right. There have been very key enablers, right, cost of mobile phones going down, cost of data going down, and people have kind of adopted, right. They were possibly looking for a means of engagement. This became an affordable piece that they kind of bought, and then they started to sort of consume content, right, which is like the first thing that happened, right. And entertainment is something which really has a very while of course we look at entertainment a certain way and sense, but it has a very critical role, right? Because it brings in a very different kind of an exposure, right? One thing which is very significant that has happened when you look at, say, Bharat, right, or say a tier two and beyond India, is that while the information arbitrage or the awareness arbitrage is kind of reduced, the problem is that there are little savings that are there, right? So for a lot of that to translate into consumption, and that gap is possibly increased, right? At least that's how it's visible when you look at it from a certain distance, right? But given that you're already into microfinance, you're seeing a lot of that trade happening at that level. What's your view of that, right? Do you think it's a temporary phase? Do you think there are certain key movements which are going to happen that we're possibly not anticipating and which will help cover this gap much faster? What's your sense of that? The availability of disposable income in those areas.
So Ashu, we started from the exciting part.
Sure.
Exciting part is always extractive.
Right.
So you are taking people away, money away from people.
Right.
So when you say beam digital content, you're taking money away from people. You're giving happiness to them, joy from them, etc.
Right.
I come from the boring side. For us, actually, the engagement with Bharat comes from the belief, and that's what Aavishkaar stands for. We believe that the world in India has evolved in a very inequitable way. It's not just large metros, but generally, if you draw a line, and Amitabh Khan does it very beautifully, draw a line across north and east of India versus west of south of India. You actually have the west and south running at a different pace, and north and east actually running at a different pace.
Right.
I have always, so the origin of Aavishkaar was simple. We wanted to create jobs and livelihoods where people live.
Right.
When COVID struck and millions of people were walking from south to north, what I started up with 20 years back got reaffirmed. The development does not come by creating jobs in concentrated places and make people actually run to those places and live in slums. Essentially, what you're doing is you're destroying beautiful cities of Bombay, Bangalore, and Hyderabad, Mumbai, Bangalore, Hyderabad, by converting them into large slums. And you are also taking away dignity of life, labor, and family from those who are actually migrating. So that's really the dichotomy we have created. I don't have a foolproof solution for it, but we are trying to actually, and that's Aavishkaar's mission, is to create jobs where people live. And so we are trying to build the entrepreneurial ecosystem that can rival in Banaras and in Patna, in Jharkhand and Ranchi, that can hopefully rival with Bangalore and Hyderabad at some point of time. They need not necessarily be purely tech. But why is tech important? Why is tech playing such an important role? A classical example, and I'll give you a very simple example. I met two young guys in Samastipur in Bihar. Now, Samastipur in Bihar, most of the people that you will talk to don't even know where it is. I don't know, Ashu, if you have ever been there. But it is actually so Samastipur, if you go to Samastipur, you will see a lot of flat land next to the Ganges with absolutely brilliant crop. The crop is maize, paddy, and wheat. These are the three crops they grow. Exceptionally high productivity, very poor cultivating practices, but still very high productivity. Now, the problem in this space, these two young guys came to me and said, hey, we found a problem. We don't know, the farmers don't know where to store. They produce a lot, they don't know where to store. But I said, oh, there must be some warehouses. He said, yeah, there is a warehouse. But the warehouse is designed for the trader, not for the farmer. I said, why? Because it is actually close to the city. Farmer live in the village. So I said, oh, you're going to create warehouses. He said, no, I don't want to create warehouses. I think when you go to a bank and you deposit cash, you get cash back. Farmer doesn't have cash, they have grains. I want to build a grain bank. And I want to use the power of technology to convert the grain into a currency, a digital currency. A digital currency that the farmer in Samastipur can trade and create value for himself and increase the farmer income by 1.25 to 1.45 times every 6 months.
Wow.
Now, where would you get a vision like this? I got this vision from two young guys in Samastipur in Bihar. So what do I do? And I'm actually trying to tell you what I do. So I gave them 4 crore rupees to play around with. Now, 4 crore is a lot of money in Samastipur, what do the entrepreneurs do? They make all kinds of silly mistakes. They burn themselves to default. They do, the money is gone. Then what do you do as an impact entrepreneur? You've won another 4 crores. Right. Now that's really what makes us an impact investor. Right. The same 50 crores in Bangalore, people will not ask you a question if you want to start a poker or a dating site. People will give you 50 crores, you will burn it and eat away. But 4 crores in Bihar to solve the problem which the prime minister of country is actually being exhorting to and yet doesn't have an answer. Right. These 2 young guys were willing to try. So we put in 8 crores. So fast forward 2020. This is 2015, fast forward 2020. The company is growing 350%, will be 120 crores in revenue. 120 crores in revenue. Wow. We have pumped in another 100 crores in the company. Actually 80 crores to be precise. This company has gone and actually digitized 97,000 tons, expects to digitize 97,000 tons of grain. Right. Only in Bihar, and it will continue to grow at 300% for next 10 years, 300 to 350%. Right. What is the role of technology here? The role of technology is reimagining an engagement that physical access will not be allowed. In Bihar, how do you actually let a farmer who's producing, a very small farmer, producing 50 kg of grain or 100 kg or 1000 kgs, 1 ton, 2 ton, how do they actually store it? How do they trade it? How do they get financed over it? And how do they actually get the better price? Right. Can this be done by physical means? Not possible. There is no way to do it. Can you use technology to reimagine the future? Right. And that's what these guys did. They reimagined a challenge by using technology to make money, to make the grain fungible. Right. The grain can move from anywhere to anywhere. The stack has been designed in such a manner that you actually have cleared, this is the class of grain I will accept. This is the losses will happen. And this is the kind of value. So it's just mind-boggling what technology can do if your imagination and understanding. So first you have to have a very good understanding of the local problem. Right. And then you should have the ability to imagine technology to bring about a change. Very interesting. And that's what impact investing does. Very, very, very interesting. And where are these founders, right? I think, we continue. In Samastipur. We continue to talk about, the kind of movement that we're seeing in urban markets, right? And I think what we're really not kind of discussing, and I think, we are also part of the fraternity, and I think we're partly responsible that, we are not talking about many of these founders, right? And who are creating some very critical infrastructure, right? And also sort of enabling technology to kind of weed out the inefficiencies that exist, right? And I think this is an absolutely phenomenal story that you've shared, Vineet, on this particular one. Vineet, I'm going to take a step back, right? And I would want to understand the impact investing as a, when you look at it, right? So when Vineet looks at it, right, from an impact. So if you are to sort of give me a breakdown of this is what impact investing is, right? This is the thesis, right? What will that be? If you could help me understand that better. So, Ashu, I'll give you 2. One is the globally accepted definition. I was actually one of the founder members of Global Impact Investing Network, which actually has given a definition. It says that if you show an intent to make impact, how do you show impact? By saying, okay, I'm going to do impact investing. So you put suffix impact behind your name, Aavishkaar impact, ABC impact, so something like that. And then you are able to report impact, then you are an impact investor. The idea was that if you actually genuinely believe in impact, then the belief is that you will do all the right things. Right. However, it can be broken down that you have to add in suffix behind your name. Right. So ABC impact, and then you should be able to produce a very nice, impactful report of how impact is done. Now, this definition I have a problem with because the definition came much later. We predate the term impact investing by 8-9 years. Right. Now, where do we come from? We come from the simple belief that to change, to bring about, if we can find entrepreneurs who have identified complex social problems and have used a business mechanism to deliver returns and taking that problem away in the process. And therefore creating livelihoods and reducing risk and vulnerability in the life of common man, then it is an impact investment. Now, these are very distinct, this thing, because one is actually a very broad, a tent that you can take to Tata's also. So in the impact investing definition, Unilever, Tata, both will fit in because they create jobs, they create livelihoods. Tatas are actually overall stated that they are impact investors because Tata Trust actually own it. So that's actually one way to look at it. We go slightly deep, more verticalized with the idea that the impact has to be real. We are not an old wine in a new bottle. We are a new wine in a new bottle. That's really where I come from. And then 80% of the markets have moved towards old wine, new bottle. Irrespective, impact investing is a very powerful statement because what you are doing is you are convincing capital to at least start thinking about a responsibility beyond shareholders' maximization of returns. And to me, that thought process, whether it is old wine, new bottle, or new wine, new bottle, doesn't matter. Even people like me will always be 10%. So I do not believe I should criticize the 90%. I genuinely believe the 90% are changing the thought process of money. And our fight has always been to convince the 300 trillion, now actually roughly 400 trillion of mainstream capital, to actually start believing that they can participate in changing the world. Because $300 billion of global donor capital is not going to change. The world of philanthropy, everybody put together is 300 billion on an annual basis. The world of capital is 400 trillion. And I was a commissioner with Paul Polman, where we wrote a report called Better Business, Better World, where we estimated that the world requires $2.5 trillion every year for next 12 years for us to reach anywhere close to sustainable development goals. Now, what is sustainable development goals? A belief and an imagination by all the presidents and prime ministers of the world to imagine a world that no Homo sapien has ever seen, a world free of hunger, poverty, and inequity by 2030. Now, that's the challenge that we are all faced with. I believe impact investing has a big role to play. The governments are aligned, and you will see a very large capital movement to this space sooner or later.
That's a very interesting narrative, Vineet. And I think I kind of wait, what's the role of responsibility, right? When you're talking of, say, the high growth startups, right? And when you talk of, say, typical venture capital funds that we kind of see, right? You essentially land up looking at companies which are not necessarily making revenues, right? Engagement comes in, and engagement replaces engagement becomes an alternate currency, right? And I think your models work in a way where you're saying that, I have X amount of engagement and there is a certain percentage which is going to convert into, doing business. And, that's essentially when I become profitable. And, that's so I am funding that consistency in engagement, right? I'm kind of changing that behavior. I'm seeding that behavior, right? In a certain way. Is that a same way that you look at, for example, a problem, or, when you're looking at such an area, right? It becomes important that profitability comes first, or transaction comes first, right? There's a visibility in transaction, right? Because in those areas, there are many regionalities, there are a lot of, like I said, layers, right? And there are a lot of local complexities that are involved, right? Does it become important that, engagement could happen? While it could, what becomes important is there a visibility on transaction when you're making those investments, right? How do you sort of prioritize between the two?
So, Ashu, our weakness is we are actually real. So when Zomato went to IPO, I was actually sitting there and scratching my head, not because I have anything negative on Zomato. I think Zomato is an impact enterprise, and actually what impact investing should do. Because what has Zomato done? Zomato has converted a lot of young kids into money earning machines. They have been able to convert them into value. They have been able to solve problems of access for food for people, of course, at a price. And more importantly, they have convinced the investors that this is the right thing to do, even though their revenue and their losses are actually the same. Right. Now, this is a perfect impact investing model, and this is where impact investing should move.
Interesting.
Why? Because the beauty of convincing people that the future is going to be great, that I am your future and therefore participate in me, forget the bottom line and the top line, is a narrative that I have failed to build. So I'm learning greatly. Now, what has been the problem of impact investing? Impact investing is actually trying to prove that I can deliver I can do good and do well in Bihar and compete with Bangalore. How can you do that? You cannot do it, but we have been trying to sell that dream. So we are selling an impossible dream. And that's why our growth is actually stymied, because we are working way too hard. I am running against all odds, and I am saying I will still win the 100-meter butterfly fields, which is being run into a very sanitized environment. That's not possible. I have to be superhuman, which is why I believe impact investing must attract the 0.1% of the top of the world, the best talent, because it's challenging. Now, that best talent will help us reimagine our problem. Like the guys I talked about, the Ergos guys reimagined the problem. Zomato is showing me the path. I have to reimagine and come up with a counter narrative that I can do this and still scale.
Interesting.
Ergos, which is in Samastipur, is looking to break even. And now break even means you're putting a lot of pressure to actually slow the growth and reach unit economics. In the space of impact, scale is what has happened in microfinance. When I invested in my first entity in microfinance, total India's outstanding of microfinance was $15 million. What is 20 years later? What is the microfinance outstanding of India? $45 billion. We have gone from 15 million to 45 billion. That's the power of masses. Why was microfinance successful? Because regulatorily, we were able to actually convince that this is priority sector lending that opened the floodgates of India's banks. ICICI Bank can take a lot of credit, followed by a significant amount of equity because profits could be made. I think the same thing is true for agriculture. The same thing is true for everybody else. If you can get talent, these are very large markets, and these markets have enormous scale. So if you bring talent there, and if you bring unlimited supply of money, there will be hundreds and hundreds of unicorn coming out of agriculture, coming out of financial inclusion, coming out of water, waste, sanitation. Unfortunately, we have starved these spaces for capital because our narratives are not so strong. So where do I end, Ashu, today? I actually believe that we have to learn from Zomato how to construct a narrative and use that narrative to actually build very large enterprises. That's whose bottom line is not a concern for the investor.
Very interesting. Very interesting, Vineet. Vineet, when we talk about the fund, when you're talking about, your investments, I'd love to know at what stage do you typically enter, what's that preferred point, typically when we look at, many VCs, that are operating in, say, urban markets as a priority area, there are, I mean, the availability of capital is it's massive, I mean, we are in a very liquid environment, and I'm sure, we'd sort of agree on that, and then there are people who are ready to bite the risk at literally an idea stage. There are people who are, of course, and then the risk gets passed on, as the model matures. But like I said, availability of capital is much higher, liquidity is much higher, which is not necessarily the case, when you are getting into an impact investing space, which has so much more complexity, So typically, when you're doing that, what stage do you enter, when you're making investments in these companies?
So Ashu, you're talking about a 20-year journey. When I started in 2001, there was nothing called impact investing, and there was no entrepreneur trying to do the change. So I came up with the idea, and then I found an entrepreneur to execute. So that's how we started. We came up with the idea. We looked for an entrepreneur. Then we moved to, we came up with the idea. So we came up with a thesis. Let's say, for example, can dairy be done in states of India that are poor and that are milk deficit? Can dairy be done? Then we looked around for entrepreneurs who are willing to start a dairy in those things. Because if you look at a state like Jharkhand or a state like Orissa, which are milk deficit, partly because they don't have enough, they used to not have enough cattle, or there was not enough supply chain that was built. There was not processing plant, but they had large centers. They had, you had Jamshedpur, you have Cuttack, Orissa. So there was a demand, but supply was coming from Gujarat. Can you create a dairy there? So we created Milk Mantra and Osam in Jharkhand. And there we went with the thesis. We were looking for an entrepreneur. We found entrepreneurs. We convinced those entrepreneurs to actually do those dairy and other stuff by providing capital. Similarly, we were looking for, one of my partners said, I was saying, you need to look at an unlimited demand and unlimited supply problem. And what is an unlimited demand, unlimited supply problem? So he said, so give me an example. So I looked around and we were crossing Devnar. So I said, look outside, what do you see? He said, I see a mountain of waste. So I said, that's an unlimited supply problem. This is unlimited supply. How do you convert it into an unlimited demand? He said, I don't know. So I said, that's not our job. Our job is to find somebody who can convert this mountain into gold mountain of gold. So we did some research and realized everybody in India in waste is actually lifting and shifting the waste. That means you come to home, a truck comes, collects all the waste, goes and puts it into Deonar and creates a Mount Everest. Instead of a landfill, we have a Mount Everest. Why is this happening? The only business model was government paying for it. So I said, okay, let's take the government out of the model. Can you find a entrepreneur who can convert the waste on this mountain into wealth without government actually paying 1 rupee for it?
Very interesting.
And lo and behold, we built a company called Let's Recycle. What does Let's Recycle do? Let's Recycle is India's largest dry waste management company. We invested in it when they were at 500 kg per day. Today, they are at 600 tons per day. And they are just starting. They are only in 5 cities in India. And what does 500 tons per day translate into? It translates into 500 crore of revenue. They will go to 10,000 tons. They will be India's first waste unicorn because the entrepreneur was able to convert. So the entrepreneur converted rag pickers into an ethical supply chain. And then, of course, we had to burn a lot of money. And I will tell you a story some other time. But we put in money and he was able to convert this ethical supply chain into an enterprise that now, just to do 2 tons per day, they needed thousands of people. Now they are doing 600 tons without those thousands of people. And they are also converting all the rag pickers, which is the poorest of pure, into blue-collar workers, into these very large enterprises. We have a 300-ton plant in Indore. We have a 150-ton plant in 200 tons now and going to be in Ahmedabad, 100 tons in Mumbai, 150 to 100 tons in Pune. Now, that's really the power of imagination and technology coming together.
Wow. I'm falling in love with this entire space concept, with I think each of the founders that you've spoken about. I think there is just so much depth. And I think with each story, I think my want and my willingness to talk to these founders is so much higher, right? That takes me to my next question, Vineet. What's the portfolio like right now? You've talked about some very interesting ones. But my sense is the portfolio is much larger. And which are some of I think, which is also an unfair question, but I'll still sort of ask you that. I'll still go ahead and ask you that. Is out of the portfolio, which is one of the 2 startups that you think have kind of really outperformed your expectation, right? While there were complexities, I think it's interesting though.
Yeah. So see, microfinance, we have actually now 5 companies which will be listed. So 0 to listing, each company. So the best one was Equitas. Equitas gave me 93% IRR. So I was the first investor before they made their first loan. And then I sold it in IPO. So Credit Grameen, which is India's largest microfinance institution today, we used to own majority in that company or pretty close to majority at that company. We sold it a little before the IPO. Suryodaya Bank, which just recently listed. Again, Bhaskar was actually in a conversation with me about how to go around taking up a new job in the microfinance space to becoming an entrepreneur, and we were the first funders. Then Arohan, which is our company, looking to list. Utkarsh Bank, again, a company that we created from the birth, and we are going to be exiting in the IPO. So these are 5 companies which have all gone from birth to IPO. We have been there all through. I think AgroStar, which is actually a tech-led agri-tech platform, which is about to conclude a very, very large fundraise. We have already done a 13x exit from that in the first round. We are going to do another 5-6x exit in the next round. But we continue to stay invested in this company as well. Nepra, the Let's Recycle company, we have already made an exit at around some 7x, 6 or 7x. We already made an exit. Some of these numbers, I'm actually unsure. It was 5.8 or 6.2, but a fairly large multiple and a very good return. So we have made money in agriculture and finance, in waste, in all kinds of companies. Wherever we have gone, we have lost money also. So I won't say that we have won everything. For example, Ergos, the company in Samastipur, I genuinely believe will give me more returns than all my companies put together, because that company can reach 10,000 crores in 5 years from now in terms of revenue. And if the multiples that apply, then it should be valued at what, $7 billion. So, and we own close to 50% in that company. So So I think the point I'm trying to make is Bhagwan ke ghar mein der hai, andher nahi. So it takes time. For those who don't understand Hindi, if there is delay in the house of God, but there is not darkness always. There is always some light at the end of the tunnel. And I think impact investing is a game of passion. Right. And patience. So if you have only passion and no patience, then you will actually leave the path of impact investing and become an investor and justify your impact while we are actually making impact, not justifying it.
Right. Interesting. And I like the way you put it, right? I like the way you put it. I think I'll possibly reserve that towards for the end of the conversation, right? But Vineet, I think there is something which is very interesting that is what you highlighted, right? To the course of our conversation, and that is that on a lot of occasions you've actually gone out, identified the opportunity, and then tried to sort of fix it, right? By bringing in, say, a founder, right? And I think this is something which has been common across some of the examples that you sort of mentioned, right? What goes on, right, in terms of identifying a great possibility, right? I'm not saying a pitch, I'm not saying business. I'm saying what goes into identifying a great possibility, right? Do you have? I mean, is it like an internal research process, and you think you kind of is there like an institutionalized process saying that this is how we're going to go about it? We come across something, we will find out the founder and do it, or there could be the other side, which is there's a founder who's trying to crack it. Possibly we can kind of shape it a little, work with him a little or her a little, and change it into being a massively scalable play, right? How does that thing play out? How do you go on to identifying a good, solid play that you want to participate in?
So there are two approaches, and I think all venture capitalists also do it, but we also do it. I think the first approach is there's a lot of inflow of companies that keep coming to you.
Right.
And that gives you an insight on what people are thinking, what entrepreneurs are thinking.
Right.
Generally, in that flow of companies, it'll be very difficult for you to make a decision which one to invest in.
Right.
Then it becomes, if somebody else is investing, then I'll also invest. Because nobody is actually having the confidence to back an entrepreneur at the early stage. So it then becomes a khichdi. You have 5 people actually jumping into the same, and just imagine 5 cooks trying to make a broth, how good or bad it will be. So that's actually one of the challenges. But it's a challenge that has worked for most investors. So that's why investors do it. The other approach, which Aavishkaar has stood for largely, or personally I have stood for, and my colleagues also believe in it, is the problems are around us. Mm-hmm. Either we actually identify a problem and then look for somebody who's solving that problem.
Right.
Or we identify the problem and then actually, or we stumble across somebody who has identified a problem and solving it. So whether we identify the problem or they identify the problem is immaterial to us. What we genuinely need is we need a guy who is passionate, committed, and wants to solve that problem.
Right.
And doesn't depend on Aavishkaar to solve it. Aavishkaar's job is to solve other problems around the problem.
Right.
So I need a doctor to actually do an operation. I can't actually certainly start doing the operation because I have money and I am smarter.
Right.
Similarly, if somebody is solving, so if Kishore Jha and Praveen wants to solve the farmer's problem in Bihar, they should understand and know it 100 times better than we should. Right. Similarly, if Shardul and Shitanshu are trying to solve the problem of farmers in Gujarat and Maharashtra and other places by creating something which is very similar to a tech-led input delivery model, then they must understand that. Aavishkaar can actually provide you support.
Right.
We can provide a lot of wisdom. We cannot provide you Naviet. Naviet has to come from entrepreneur. The entrepreneur should say, I can change the world.
Right.
My job is to then identify that entrepreneur, provide him the capital to change the world. Even though both I know that it may not change, but I have to trust the entrepreneur instinct to change it. And so Aavishkaar now offers wisdom. When I started off, I was the naive, stupid guy who wanted to raise capital to change the world. Now I'm actually looking for other naive, stupid guys who will change the world. I'm trying to provide capital to them.
Right. Interesting.
And that's really Aavishkaar's thesis. Find the naive guys who challenge the status quo.
Interesting. Does that also leads into, is fool's confidence also, a characteristic that you look at?
So see, people are different and it's very difficult to actually judge how people will turn out. I have our entrepreneurs of all kinds. We have entrepreneurs who are arrogant. We have entrepreneurs who show us the door. There are entrepreneurs who actually love us. There are entrepreneurs who worship us. There are entrepreneurs who treat us like a piece of shit. you have to deal with all kinds of people because for us, they loving me or me loving them is important.
Right.
The problem that they're trying to solve is way more important than his ego or my ego or her ego or my ego. So for us, we are very focused on the problem and we are very focused on what our investors want. So till the time we can make money and return, and till the time the problem is solved, our interpersonal issues are immaterial to us.
When I set off, fool's confidence, right? And I have a theory around it, right? Essentially what happens is when you have that, right? That essentially leads into persistence, right? And I think wanting to make it happen, right? And I think that is just so much more important when you are, like you highlighted, right? There are so many more complexities, right? With where you are kind of operating, right? At that level, right? And regionalities play in, language plays in, willingness, while there is willingness, ability to pay, for example, is limited, right? And those are different kind of challenges that you kind of deal with, right? So I think persistence becomes a common constant, right, across most of these founders. And that's essentially what I meant when I said, do you look at fool's confidence, right? Because, there has to be this willingness.
Survival and longevity is actually a critical criteria. So just from our diligence perspective, I'll ask Ashu, what's your family? Where do you come from? What's your aspiration? Right. That's how you try to make a judgment whether this guy is actually in it for a short haul, excited, passionate. So when an entrepreneur tells me I'm very passionate, I can become very, very scared because people who talk about passion are rarely passionate. So,
I like that argument. Vineet, I have another question on the founders bit, right? When you're trying to sort of trying to assess them, understand them better, right? And I think, like I said, that's a common constant, and that's a common constant for I think each investor, right? Irrespective of which space that they're investing in, right? Given the kind of country we are, right, with so much diversity, right, it becomes a challenge, right, to scale a business. And like you said, right, somebody who's solving it for Samastipur might not be the right solution for, say, something in Madhya Pradesh or, something down south, right? It just becomes very difficult, right? And the mindset, which is, and especially when you talk about impact, right? My sense is, and at least whatever interactions that I've had, is that a founder is geared to uplift, people there, who are kind of, stuck in the situation or, because of limited means and ways, right? I think the founder is essentially geared to solve that problem, right? I think scale is not the first calling in that scheme of things, right? Does it become a problem? Does mindset become a problem ever, right? As soon as you're then looking to, say, expand, grow out into other markets, you have to deal with other regionalities. How do you view that, right? That's a very, very complex piece, right? And it's very difficult to, build a very clear thesis around, right? I think it has to be dealt more on a case-to-case basis, right? But given that you do it, right, how do you do it? I would want to understand that.
So look at myself. I started with $100. My commitment, my passion was to reach $1 million.
Sure.
So if you would have met me in 2001, you would have said, "Brother, 1 million, what world will you change?" But for me, $1 million was a very large amount of money from where I was starting off.
Right.
I think the same applies to an entrepreneur. And when you are actually making a judgment, you are actually trying to judge whether the entrepreneur has self-learning capability.
Right.
So when I moved from $100 to $1 million, it was not that I said, okay, now time to go home.
Right.
Then I was hungry to go to $100 million.
Right.
And then I was hungry to go to $1 billion. Now I'm hungry to go to $12 billion.
Right.
So, and how does that hunger come from? So first you have to sustain that hunger.
Right.
Because at some point of time, you will be wealthy enough to retire.
Right.
And if you are only seeking that wealth, then you are not going to scale up. Then I, as an investor, will have to write off everything I do.
Right.
If I get too much in love with what I'm doing, I still, as an investor, have to write off, because then I will not let you sell.
Right.
Because I'm very comfortable in my own cozy world.
Right.
You get both kind of investors, entrepreneurs. Right. Some entrepreneurs who don't want to scale after they've reached, because their ambitions are not high. They don't want to. They basically will come back and say, "Listen, I do not have I see a reason for me to scale so much. Why should I stress so much?
Right.
For you, why should I stress so much for you?
Right.
I don't feel like." So therefore, it's very important for us to understand where does the entrepreneur want to go?
Right.
What is their destination? And is that destination 3 years down the line, 5 years down the line, or 50 years down the line, or infinite?
Right.
When you find a guy with an infinite vision, then you actually create companies that will last 20, 30, 40, 50, 100 years. When you find people who are very clear, so then I can find an entrepreneur who says, "Listen, I'm here to solve this problem. And at this juncture, once I've solved this problem, it is no more exciting." then that person is actually a great guy for strategic acquisition. So you build a company for an acquisition. You build a company for an IPO when the longevity is long term. Build a company for acquisition if the entrepreneur is actually in and out entrepreneur. And if the entrepreneur doesn't want to grow, you don't give your money. So that's really how you do it. You categorize them into those three. And you design your exit strategies around their thought process. And you have very candid and upfront conversations. That, listen, guy, you look like more of a in and out guy. So let's actually try to give you a path where you will get acquired somebody. And somebody who wants to build an institution and is willing to self-learn and continue to scale, then let's actually plan for an IPO so that you can be on the driver's seat and you have very liquid asset in front of you, so that we can also.
Very interesting. And I like the fact how comfortably you're talking about an IPO, right? I think that's not something that we commonly hear across many conversations, Vineet, that I can assure you about.
Yeah, sure. I think the problem with the world is I am into the business of money. And my objective is to use the money to make impact. My objective also, but my bigger objective is to convince $300 trillion of the money to come to me. So if the $300 trillion wants to make money, who am I to tell them not to make money? And if IPO is the best way to actually create liquidity, then why should it actually be off the table?
Interesting. Vineet, there is a lot of stuff which is happening, right? When you talk about, agri-tech, for example, right? And agri-tech is all of a sudden, while, it's something which always was very interesting, right? There were many companies that were built around it, right? Around the commodity business, right? Supply chain, storage, right? With the startup ecosystem, agri-tech, for example, has become very hot, right? And now, after a couple of years, right? Intersections have become all the more interesting, right? So you have now, for example, agri-tech and layered with fintech, right? For example, right? Where there are certain companies that have come in, they've gotten funded. They're not necessarily very clear theses. What they're possibly doing is they're onboarding a lot of, say, existing transaction which is happening onto their platforms, right? So they're becoming kind of rerouting that, right? Do you think these are also opportunities that will, for example, qualify from an investment or impact investment standpoint? Or do you think this is not this is an experiment of sorts which is happening? There are certain people who understand that this could be a large space, but the thesis is not very clear, right? I mean, how do you view it, right? Because for me, I am not very clearly able to see it, right? Because on one side there is impact investment, which is very clearly driven in terms of impact first approach, right? Which is doing it in a way which is business first, for example. And here it is where technology has been introduced. There is an incentivization which is happening, which might not necessarily be in the right direction to onboard those transactions on the platform, right? And could be a temporary phase, right? How do you view that? Is this something which is going to qualify? Is this becoming an overlap between, say, what a typical venture capital ecosystem would look at and what an impact investor would look at? Is there an overlap there? How do you view it?
So Ashu, I think first and foremost, if you look at Aavishkaar investee companies, our follow-on investors are all mainstream VC and PE guys.
Okay.
So we are actually acting as a bridge between those who are on the other side of the divide and this, because that's what Aavishkaar thesis is. Right. The mainstream capital has to see this as great opportunities. Otherwise, we will never be able to. Otherwise, I'm actually trying to put a seed and putting in a one bucket of water into and expecting a tree to come out in the deserts of Sahara. Right. With my own one bucket. Unfortunately, the tree will only grow if you keep watering it. Right, and that water is going to come from mainstream. So I can't just do that. So that's the most important part of it. But I think the business models of various kinds will evolve. Right. Some of those business models are far more comfortable to venture capital investors, like the one that you're talking about, where you're actually onboarding transactions, not necessarily. For us, the first screen is, why will this activity create an impact? Mm-hmm. If we are not able to justify ourselves that this activity is taking place. So one way you can say, whatever you do in agriculture, you will create an impact. But what you are doing in agriculture, what kind of impact? So impact again is defined in direct impact, indirect impact, and then we call it systemic impact.
Right.
Now, I'll give you one final example to bore you. So let's actually look at systemic impact. So Vineet, what is systemic impact? Direct impact is you are actually increasing the income of the farmer, very direct, like I have told you about Ergos. You are trying to change the waste, you're converting waste into wealth. In the process, you are helping rag pickers, you're cleaning India, very direct. Indirect is when you're giving a microfinance loan to somebody, you are charging them interest, and you are hoping and praying that with the access to the loan, that person buys a cow and the cow gives milk and the person actually comes out of poverty. There, the impact is indirect. You are enabling the person, but you are not solving the person's problem. Person can fail, person can succeed, person may not go anywhere. So all the three outcomes are possible. Then you move to the third part of it, systemic impact. What is systemic impact? Let me give you an example. India, as you might know, Ashu, is Indians used to eat millets not very long back. We used to eat millets, jawar, bajra, ragi. Across India, you eat millets. Now we eat wheat and rice. Wheat and rice are both foreign crops, imported. Our bodies are not designed for it. Today, it is not considered healthy eating if you eat wheat and rice. Now, if you're eating wheat and rice, they are not healthy eating. Wheat is worse than rice, but from a health perspective. How do you take Indians back to millets? One way to say farmer should grow millets, but farmer says, I can't sell bloody millets. How will I grow millets? So, you cannot grow millets because you can't sell it. So then you have to, intervention has to be on the market side. So what do you need to do? You need to find an entrepreneur who is converting millets into a produce that rich Indians are willing to eat. Why rich Indians? Because they have the disposable income. So you have to bring health, you have to bring fashion, and you have to bring quality. That means, what is the weakness with millet? Millet is actually a coarse crop. A coarse crop, no rich guy wants to eat a coarse stuff. But if you add health, you had fitness, and you create a jazz around it, you can do. So we came across a company called Soulful, which actually makes high-end breakfast cereal, converting millets. What you're doing, you're selling it to rich people. Why are you selling to rich people? So you create big margins. If you create big margins, you can actually go and acquire millets now this is a very long trajectory, right? But if you don't do this, you will not be able to create a systemic impact. Now, what happens if millet is grown by farmers? One, it consumes very less water. Second, it consumes very less pesticide. Third, it consumes very less fertilizer. Fourth, it is actually very good for your health. Fifth, it is growing on what is called fallow land. It's the land that is not being cultivated. And sixth, it is taking away and saving you from eating more wheat and rice, which is actually destroying our water aquifers, which is actually destroying soil fertility. In one systemic investment, you can actually address so many more. And how do you exit? We create this company, entrepreneur does a great job, Tatas come and acquire the company. They come and acquire the company, we make a lot of money, and Tatas, and why do we sell to Tatas? We sell to Tatas because we believe Tatas will do a better job of scaling this company than Aavishkaar can. Why Aavishkaar can't? Because Aavishkaar has limited capital and does not have the wherewithal or the muscles of distribution that Tatas bring. And we will require 10 times more capital to build that up. So we use an efficient methodology to get out. Again, everything is commercial, but we are focused on whether our impact will scale better with Tatas or with Aavishkaar. And our conclusion was much better with Tatas. And so on a commercial basis, we exited, but in a responsible manner. And that's really what we are trying to do when we are looking at impact in different ways.
Very, very interesting. Vineet, we're towards the end of the conversation. Last two questions, right? How do you view, and Soulful is a beautiful example that you highlighted, right? It actually leads me into my next question, right? And I was in my mind trying to figure out a way to sort of, weave it in to our conversation. And this is more on D2C, right? I think, right at the start of the conversation, you said that, you have to have a distributed workforce, right? You cannot have concentrated workforce because there is a lot of pressure that it creates in the ecosystem which we've built, right? We've designed, right? And for a holistic development of the country and of our size, it's important that we have more and more people contributing in a dispersed way, right? D2C is a new opportunity which is kind of emerging, right? Soulful is an example which kind of qualifies within that band, right?
We're a little away from D2C because we were not direct to consumer. We're still using the distributors, and
you are. But I think every brand today is now kind of exploring the possibility of direct to consumer, and I think COVID has kind of pushed us in that category, right? D2C also is kind of offers an opportunity for somebody, say, based out of a Bhopal or a Kanpur or Lucknow or wherever, to create a product and then dish it out to the audience all across, right? Not just in India but globally, right? Is that something that will you start to look at it? When you are looking at investments, what are some of the other emerging areas that will be of interest in the coming times?
So electric transition, D2C, both are one of the some of the key areas for us looking forward.
Right.
Electric vehicles, especially three-wheelers. For us, it's actually livelihood, business, and value creation. D2C is simply because it is the way you create both returns and impact for us. So if you're doing an Ayurveda product, you are actually trying to solve a problem or using D2C that deeply impact both health of the consumer and the in the rural economy on the other side. So for us, we have done a company called Jaipur, Jaypure, which we sold to Aditya Birla Group. And Jaipur was a classical example of D2C. It was direct to consumer, 30% exports, and it was like a Fab India online.
Right. Interesting. Vineet, my last question, right? What's your advice to founders? And there are many, many founders who are working on in waste, in agriculture, and they're kind of wanting to change the landscape, right? And more often than not, right, they don't get the kind of support required, right? There are very few people who can really come in and kind of handhold them, right? And I think this is something that we've discussed across our conversation, that persistence and patience is very, very important, right? When you're dealing with especially the bottom of the pyramid, be it in urban areas, be it in rural areas, right? This is something which has to be a common constant, right? So, what will be your, say, 2 or 3, pieces of advice, right, for founders to stick to the game?
So, first is definition of entrepreneurship. An entrepreneur is somebody who understands his or her limitations and excel within it. You have to be excellent with the limitations that you know about yourself. The first thing entrepreneurs should ask, do they know themselves? Most entrepreneurs don't actually. And so first is, it's a journey of self-discovery. Please find yourself and understand what your limitations are, and then try to excel within that. If you do that, there are 2 things. First, the journey of self will tell you, are you an entrepreneur or not? It's a very difficult thing. Entrepreneurship is not for everybody. You come across in your journey that you are not an entrepreneur, there is nothing wrong in leaving and dropping this hot potato. It's not necessarily, don't be an entrepreneur just because you. The second thing is, once you are an entrepreneur, you cannot be bullheaded. So you cannot be a bulldog, nor you can be extremely malleable.
Right.
So you cannot be so flexible that I can twist you 5 times over, but you cannot be so bullheaded that you can't see an opportunity.
Right.
And a large number of entrepreneurs fail for both the 2 reasons I mentioned. First, no idea who they are. Second, too bullheaded or too flexible. Both bullheadedness and flexibility, over flexibility, will lead to a death valley. You're walking in a valley of death, mortality will be very high. If you are able to do these 2 things, the third thing is, an opportunity will come and knock every door of an entrepreneur. An opportunity will come and knock at the door of every entrepreneur. You should be there to take that, and you should be able to identify it. 98% of the entrepreneurs do not understand when an opportunity is knocking at their door. And second, even if they understand, they do not know which one is the opportunity. So making a distinction between a false knock and a right knock. Now, these are the 3 things. If any entrepreneur can actually really reflect on these 3 things and try to ask themselves this question on a regular basis, and it doesn't matter whether you are in your first year or your 20th year. This is a question that I ask myself every day. Do I know my strengths and my weakness? Because you start realizing you are instinctively not designed to do certain things.
Right.
For example, I'm instinctively not designed to deal with the government. I'm just not designed. I just am too straight. I need to find a person who is better than me if I'm dealing with the government. So you need to discover yourself. And I think it's a journey. It's a continuous journey. You have to learn to excel within your limitations. And then you have to learn not to be bullheaded or over flexible. And finally, identify opportunity when they knock.
Vineet, it was a pleasure to have you. I thoroughly enjoyed this conversation. There are not a lot of conversations that you want to continue with, right? And I think there is just so much intelligence, so much depth, right, and so much of brilliance that I want this conversation to go on, right? And many, many examples like you highlighted, right? I want to continue to discuss those, right? Unfortunately, there is a time limitation on this one, but I look forward to being with you, having you over very soon with us. I think there is some very, very interesting defining work that you are at, right? And I don't think you need to. There is a need for me to say that, but I think the fact of the matter is that with the complexity that we have and the diversity that we have and the layers that we have in our country, right? I think there's a very deep and a significant need for understanding impact and investing in that space, right? Not necessarily driving it or viewing it from an opportunity or a lens of output straight up or an outcome straight up. But I think can it go on to make an impact, right? In people who are at that layer, right? Vineet, thank you so much. It was a pleasure to have you with us. It was lovely to have you with us. Thank you.
Thank you so much. Thank you.